episode of the Daily Dose. Today is Wednesday, November 30th. A lot going on in the markets today. Powell spoke, the markets reacted heavily. We have some technical levels that got broken through, some that just got met. So, a lot of stuff going on. Let's get into it. So, U.S. stocks soared Wednesday afternoon as investors cheered comments from Federal Reserve Chair Jerome Powell that signaled a 50 basis point rate hike in December. The S&P 500 rose 3.1%, while the Dow Jones Industrial Average was up 2%, and the Nasdaq was up 4.4%. In a highly anticipated speech at the Brookings Institution in Washington, Powell said it makes sense to moderate the pace as our rate increases as the Fed heads toward its estimated peak in benchmark interest rates. Stocks surged after the text of Powell's speech was released. The afternoon gains came after stocks finished lower on Tuesday, even as concerns regarding China's strict zero-COVID policy abated. U.S.-listed Chinese stocks rose for the third day, adding to record rally this month as Beijing announced plans to accelerate vaccination of China's elderly on Tuesday, spurring optimism among investors about a path forward for easing COVID restrictions amid nationwide protests. The U.S. dollar was weaker. Oil was up. For investors, though, Powell's speech, likely his final comments before the Fed's next rate-setting meeting in mid-December, was the highlight of a jam-packed day in economic data points. The speech also came less than 2 weeks before the release of November's CPI data. Strategists said that the market has already priced in the coming rate hike slowdown and higher terminal federal funds rate, both of which Powell had already hinted at in his early November conference. Every cycle is clearly different, but with markets increasingly confident of a terminal rate around 5% and inflation getting back close to the target in 2024, it's worth remembering that exactly a year ago today, the markets were pricing a Fed funds rate of 0.68% by the end of 2022 and CPI of 2.6%. So this is just a chart kind of showing where inflation has really hurt the most. The green was the amount of household spending in 2019. The yellow is what it is since then. So obviously transportation looks like the biggest relative to what it was before. And then housing and gas, food at home, household energy, basically all your necessities you're having to pay more for. Early in the day, investors studied another wave of macroeconomic data, and that it showed private companies added 127,000 jobs below expectations. So, again, even though that's weak job data and that could hint that we're headed towards a recession, the market interprets that more along the lines of the Fed needing to ease their rate hikes, which is also in line with what Powell said today. So I don't want to get super into the rest of this because I want to talk about what happened today in the stock market. So let's go to the S&P 500. This is the first day that we've closed above the 200-day moving average since... Oh, shit, I didn't mean to do that. Sorry about that. I accidentally messed up one of my zones. It's back. Excuse my language. This is the first time we've closed above the 200-day moving average since April. And we did break below the moving average, come back above, and then go down. But we've been down for months, and we just broke above. That's significant, but look where we stopped. Right on the trend line. So now I'm looking at this trend line. If the trend line gets broken, for me, that's extremely bullish. That's showing that this trend we've been in since the beginning of the year has been broken. Now, that would indicate from a technical standpoint that the bottom is in. History would tell us that markets don't usually bottom until after rate hikes are actually stopped. So usually in markets, the bottom actually comes around 1 to 2 months after the Fed starts cutting rates again, which is really interesting because the market right now is telling us, hey, we might have already bottomed, especially if we break through this trend line. Now, that's not for sure yet. We still haven't broken through this trend line, but if we did, that's what I've been looking for to tell me that the bottom's in for this whole market. And if that were to happen, we'd have some conflicting evidence. We'd have the technicals telling us, hey, we probably already bottomed, but we'd have history telling us that, hey, it's going to be a couple months until we bottom. Because even if they slow down the pace of rate hikes, they're still going to raise rates for the next a few months into 2023 as well. So history would say that the market won't bottom until after they begin cutting rates again. So we have some conflicting evidence here. I'm going to be watching this trend line closely. If we end up breaking above the 4100, I mean, that's going to signal to me that this significant downtrend has been at least broken for now, because that's what I've been looking at. So I was not so much expecting the market to rally like this today, but it's not surprising considering the dovish comments that we got from Powell. So really, really big moves today. That's a significant break of the 200-day moving average. It really is. I don't want to downplay that. So let's take a look at Bitcoin. Bitcoin rallied too. It's a little bit weaker, still below this zone of 17.7. For Bitcoin, I'd be looking at a break back into this range. I'd be looking for Bitcoin to be above 18.9. So pretty much if Bitcoin gets back into the 19,000s, we'll be back into this range that we were in for like 5 months. And that would be pretty bullish for me on Bitcoin. But I would still look to the 17.7, the 17.5 even as a point of resistance for more selling in Bitcoin. There's a lot going on in the crypto space, even though Bitcoin has been kind of correlated to this market as far as just the general trend of where it's going during this bear market. There's so much going on in the crypto space with the FTX collapse, and it's kind of like a domino effect that I wouldn't be as bullish on the Bitcoin price at this moment in time if the markets did continue to rally. We'd have to look at the price action on Bitcoin. I think that there's a lot of other institutions that could go down, a lot of other cryptos that could go down. So that's what I'm looking at on the Bitcoin market. So I'm probably going to keep it there. I wanted to keep this one kind of short and kind of pack everything together that you can just take with you. Again, these levels on the S&P 500, you got to watch the 200-day moving average and this trend line I have on the chart right here. Which right now is sitting exactly where we closed. So that's interesting to me if we get a little selling tomorrow. So that's what I'm looking at. I do appreciate you watching or listening to this episode. Hope you all have a great week. Hope you all made some money today. And until next time, thank you, and I'll see you tomorrow.